morning. Welcome back to our channel. Today we will be discussing about cash credit. So we will be discussing what is cash credit, what are the advantages, what are the features, and what are the disadvantages. So cash credit is commonly offered to a business rather than to an individual customer. Financial institutions such as banks or credit union normally requires a business customer to put down a form of security as collateral in exchange for cash. This security can be tangible assets, their stock, or property. The cash limit extended to the cash credit account is normally a percentage of the value of the collateral security they have given. So now let us see what are the important features of such type of cash credit account. First and foremost, it is borrowing limit. A cash credit comes with a borrowing limit which is determined by the credit worthiness of the borrower. A company can withdraw funds up to its established borrowing limits. Second, interest on running balance. In contrast with the other type of traditional debt financing, such as loan, the interest is charged only on the running balance of the credit account and not on the total borrowing limit. Next, minimum commitment charge. The short-term loan comes with a minimum charge for establishing the loan account, regardless of whether the borrower utilizes the available credit or not. For example, banks typically includes a clause that requires the borrower to pay a minimum amount of interest on a predetermined amount or the amount withdrawn, whichever is higher. So, a minimum charge is to be paid. Collateral security. The credit is often secured using stocks, fixed assets, or property as collateral. Next feature is credit period. Credit Cash credit is typically given for a maximum period of 12 months, after which drawing power is re-evaluated according to the customer's credit worthiness. So let us see what are the advantages of cash credit account. First and foremost, source of this cash credit can be considered as a source of working capital financing, as the company would not worry about the liquidity issue. Second one, easy arrangement. Cash credit account can be easily arranged provided that collateral security is available to be pledged and realizable value of such collateral securities are easily determined, because the fund or the advance is given on the basis or according to the percentage of the collateral securities value. Flexibility. Withdrawals on a cash credit account can be made many times up to borrowing limit, and the deposit of excess cash into the account lowers the burden of interest that a company faces. So it is more flexible to withdraw as well as to pay back. Interest charge. A cash credit reduces the financing cost of the borrower, as the interest charge is only on the utilized amount or the minimum commitment charge which we have discussed earlier. So whatever it is, whether it is a utilized amount or minimum commitment charge, the interest is charged only on the used uh, used amount. So let us see what are the disadvantages of cash credit account. First and foremost, one is high rate of interest. The interest rate charged by a loan on cash credit is very high as compared to the traditional loan. As the risk is also very high, banks charges high interest rate. Minimum commitment charge. A minimum commitment charge is imposed on the borrower regardless of whether the company utilizes its cash credit or not. And this has been explained earlier, and it can be considered as a disadvantage, because even if we are not using the fund, we are supposed to pay a minimum commitment charge. Temporary source of finance. The loan is a short-term source of finance, as we discussed earlier. It is the maximum limit is 12 months. A company cannot rely on it for an extended period of time. So, what happens after the expiration of the loan? It must be renewed under the new terms and conditions. Last point, no verification of end use. The bank cannot verify what is the actual use of the fund which is borrowed. So, in many cases, the fund can be used for unproductive purposes and may come as a trouble for the banker. This is all about cash credit. Hope you understood. Feel free to ask questions or feel free to ask doubts. Thank you very much.